Price action and market structure in Forex trading. Price action is all about analyzing historical price movements directly on a chart, without relying heavily on indicators. By observing price itself, traders get a clearer view of trends, momentum, and potential reversal points, allowing for a more straightforward, data-driven trading approach. Market structure is essentially the framework of price movements. By recognizing specific patterns like breakouts, fakeouts, and retests, we can better understand how the market is behaving and use this knowledge to find optimal entry and exit points aligned with the trend and manage our risk effectively. A range is an area between a support level and a resistance level. In a range, you'll find price action bouncing up and down before breaking above or below to the next range. Price moving about within a range, known as a ranging or consolidating market. Always remember, a support is an area that holds price from closing below a particular price level, much like a floor. A resistance is an area that holds price from closing above a particular price level, much like a ceiling. When price hits a heavy support and rejects, it usually goes back to the top of the range, and vice versa for a resistance. A trend in Forex trading is simply the overall direction in which the market is moving. Trends can be upward, which we call bullish, downward, which is bearish, or sideways, often known as ranging. By understanding and following these trends, we improve our chances of successful trades. There are three main types of trends: uptrend, downtrend, and sideways trend. An uptrend is characterized by higher highs and higher lows, while a downtrend consists of lower highs and lower lows. A sideways trend, or range, happens when the price moves within a confined area without a clear direction. Just remember, in a bullish trend, we're looking for a series of higher highs and higher lows that show a strong upward momentum. First, price pushes to make a high and then retraces, but doesn't close below the previous low. Next, price pushes higher to break the high made previously, and then retraces to make a higher low than made previously. The inverse is true for a bear trend. A breakout happens when the price pushes past a significant level, like support or resistance. This often signals a change in momentum and may mark the start of a new trend. Breakouts are usually accompanied by a surge in volume, as traders jump in to take advantage of the momentum. A fakeout is essentially a false breakout. The price appears to break past a key level, but the following candle quickly reverses and closes right back into the range. Fakeouts are more likely in volatile markets or around major news events when price movement can be unpredictable. A retest happens when the price returns to a level it has already broken, testing it again as a new support or resistance level. This retest often offers a more secure entry point and provides confirmation that the breakout is holding. If the level is successfully retested, it can act as a reliable support or resistance. These three market structures are the basis of all of our setups for taking a trade. This is also the fundamental way the market moves, on all time frames in an infinite cycle. That's all about price action and market structure in Forex trading. Thank you for watching. Stay awesome and keep tuning in. See you in the next video.